Now, the Organization for Economic Cooperation and Development is increasingly pessimistic about global growth this year and the next. The OECD is forecasting global growth at 3%, down 0.3% from its November outlook, and 3.3% in 2017. The group is warning that the slow growth will continue if governments don't change spending and trade policies. Among economic risks is a potential British exit from the European Union. Now, if voters opt for the so-called Brexit in a referendum this month, the OECD maintains that this will reduce growth in Europe substantially. The refugee and migrant surge to Europe and a lack of unified, effective government responses also threatens global financial stability. That, of course, according to the report.
We see the world stuck in a low growth trap, as I mentioned a moment ago. Global growth is projected to continue to, what I would say, to limp along around 3% this year, to pick up only modestly in 2017, 3.3. Moreover, this pickup hinges on avoiding significant downside risks like Brexit, like financial disruptions in emerging markets, that are linked to high corporate debt and also to exchange rate risks. This low growth trap involves a cycle in which diminished expectations become self-fulfilling. Firms witnessing low demand growth are naturally cautious about expanding investment. Weak investment then holds back capital deepening, and it hinders the pace at which innovation is embodied in plant and equipment.
Well, let's get some insight into this report. Jean Uhrman now joins us in New York. Jean, welcome to the show. Now, of course, looking at the report, it says the economy is slipping into, in quotes, a low growth trap, and it seems to place a lot of the blame on monetary policy and, of course, governments across the globe. What is your take on this?
Well, hi, Ujay. Yeah, quite a sobering report. It seems, though, that the OECD is less blaming monetary policy actions and is rather kind of acknowledging what many economists and policy experts have been increasingly saying, which is that monetary policy's ability to have an impact on growth and inflation is just simply running out of steam. And it notes what many experts warn, which is that more monetary easing globally is not only less effective, but as it puts it, even counterproductive in some circumstances. At some point, falling interest rates begin to crimp the credit system, with banks' net interest margins shrinking, lending then shrinking, etc. The OECD is just pounding the table again on similar warnings that it issued in February for governments around the world to turn to the second possible arsenal to fight sluggish growth: fiscal stimulus, especially through government investment in infrastructure projects. But the people I've spoken with say that the OECD is very much like a salmon swimming upstream with this lobbying effort, given that governments are very reticent about this Keynesian approach with so much uncertainty about the global economy.
Right, and it also highlights potential risks to global growth going forward. For example, it talks about the British exit from the EU. Now, what really are the chances we will see a Brexit at this stage?
Well, the OECD warned in its latest report that by 2030, in fact, post-Brexit UK GDP could be over 5% lower if the country stays in the EU. Now, Uche, I know this is not a very satisfying answer, but it really is a toss-up at this point. Since September, those voters wanting to stay in the EU has until recently held a consistent lead over those wanting to leave. But more recently, that has been shifting, with an increasing number of British voters moving towards the Leave or the Out campaign. According to two surveys taken by polling firm ICM over the weekend, one by phone and one via the internet, the Out campaign is actually several points ahead of the In campaign in both surveys. Now, what's significant about that latest poll, or this poll, is that until now, the phone survey consistently reflected voters wanting to stay in the EU ahead of those wanting to leave. It breaks out 45 against 42, with 13% undecided. The Out campaign is said to have gained traction by playing to voters' concerns and their anger over migration issues. But You've got a separate poll in the Telegraph newspaper that was published on Monday, and it has the support for the out campaign rising, but still behind the in campaign. So, as the cliche goes, with Brexit's outcome right now, it is anybody's guess.
Right. So let's talk about some of the other issues the OECD pointed to. It talked about financial disruption in emerging markets. Now, how much would you say all these risks it mentioned pose a threat to growth in Africa?
Well, the OECD did highlight, in particular, a projected slowdown in China and stagnation in India as key concerns. Already, the cooling in China, we've seen the world's #2 economy taking a bite out of U.S. and European exports as well as others. Africa, given its dependence on oil and commodity exports, of course, has considerable risk. Now, that being said, despite a global slowdown last year, Africa was still the world's fastest growing region in 2015, second only to East Asia at 3.7%. And currently, growth prospects look even better for 2017 at 4.5%. This is according to a report put out jointly by the African Development Bank, the OECD, and the UN. However, this forecast is predicated on a recovery in the global economy and improvements in commodity prices. Uche?
Well, quite interesting. Thank you so much, Jean, for those insights. Of course, Jean Uhrman joining us in New York.